In this week's episode of the Stockscores Market Minutes, we're going to talk about what good traders focus on. You might be surprised what it is. And then I will do my analysis of the markets, figure out if we are getting another wave in the stock market crash. And then finally, I'll look at the day trade of the week on IMV. So one of the great battles that all traders and investors fight against is emotion, their emotional attachment to money. And one of the cures for that is to change what you focus on. Instead of focusing on the outcome of the trade, try focusing simply on the process. What is your evaluation process when you're considering a new trade or a new investment? Take a step-by-step, methodical approach, looking at the evidence that is in front of you, and simply, what are the facts? Does the trade meet the criteria that you have? Now, the reality is that most people get hyper-focused on the money. They think about the outcome. Either they fear losing money, and so they're frozen and unable to take action, or because of that fear of losing money, they don't take the loss when the market comes down to their stop loss point. On the other hand, they get hyper-focused on the profit potential, and they don't look for an exit signal unless it hits what they want to make. And even when it hits it, sometimes, a stock goes up $2,000, $3,000 on the trade. They get to that point and they're like, well, that's not enough. I want more. They're hyper-focused on the outcome instead of the process. We buy stocks based on strategies. So you develop a strategy, or you get one taught to you, and then you apply the rules for when to buy, how to manage risk, and when to exit. And what the profit and loss statement says, or what your trading platform says you are up or down on a position, is irrelevant to the decision. All that matters is the information in front of you. Is the stock giving you a sell signal? Is the stock giving you a buy signal based on your strategy, something that you have proven to yourself and have confidence in? If the market tells you to do something, do it, but don't do something because your emotion tells you to do it. All right, let's get into this week's market analysis. We had a fair bit of weakness in the market last week on the heels of the U.S. Federal Reserve's decision to raise interest rates, but more importantly, the implication of further rates. Not a great surprise when you look at the chart, and let's jump into the S&P 500 chart and go to the 3-year weekly chart here. And I've talked about this in recent weeks, how the market was bumping up against resistance, and when markets rally into resistance, they tend to get stuck at it. And we've seen that repeatedly, and we're starting to see it again. Now, the real question is, are we going to go to new lows, or are we going to build a rising bottom which would complete this little head and shoulders pattern? If we had another week of weakness and then reversed and started to move up towards that downward trend line, well, then the market is maintaining some stability. If instead we continue to move lower and get to new lows, then the sellers are still firmly in control. Now, to figure out what the likely outcome is in the next few days or the next week, I like to go to the shorter term, say hourly chart. So I jump back into Stockscores. I'm going to click on 10-day, 30-minute, which is let's actually go 15-day. Now let's go 1 month, 60-minute. There we have a little bit longer term view. And you can see that important support was broken this week. We have a downward trend line building there, and we are far below the downward trend line. So that means that this chart is negative, but also oversold. And therefore, it would be quite likely that we'll see the market try to make a little bounce back early next week. Not because things are necessarily any better next week than they were this week, but rather the market probably moved down a little too fast, in too much, and therefore the sellers are a little bit hesitant to sell more, and the buyers are going to come in and try to pick up bargains. That's a very short-term thing. We're talking about maybe 1 or 2 up days in a row before we hit this downward trend line. And when we do, we'll get stuck. If we can build a rising bottom and break through it, then we're going to stabilize, and that's going to be good for that weekly chart. If, however, we go up a little bit and then just keep going down, you have to trade with the market you have, and that would be a negative market. And in that scenario, generally, you do not want to be a buyer of stocks unless they are alpha stocks, unless they are stocks trading on their own story. These tend to be lower price stocks that are trading much more volume than normal, with stronger liquidity, more actively traded than they normally would. That's an alpha stock. And so you can trade those, but it's relatively short-term trading, day and swing trading, because the longer-term trend is still down. Now let's take a look at the Canadian market. T.XIU is the symbol. I punched that in the top upper left corner of Stockscores.com, and I can see that it too is in a negative trend. Let's look at the 1 month chart. Looks pretty negative. If you go to the 3-year weekly chart, it looks a little better than the S&P because we're really just stuck in this sideways range as opposed to in a downward trend still. So that's a good thing, and that's largely being held up by some of the commodity sectors. Energy, gold, very heavily denominated in the Canadian market, and that's what's making this chart look better than the S&P 500. All right, well, let's jump into some of those commodities and take a look at gold, which has been doing fairly well in the last 6 or 8 weeks. And you can see there the bottoms are rising. That means the buyers are in control. A little bit of volatility this week, not really trending upward, but if we look at the 1 month chart, you can see that we're still generally in an optimistic situation. A little bit of weakness at the end of the week maybe makes this chart go sideways in the short term. And in the long term, on the 3-year weekly, we've broken the downward trend line. We built a very short little rising bottom. Generally, I think gold looks pretty good, and it's going to be largely dependent upon what happens with the US dollar, which I'll talk about in just a moment. But let's first look at oil. USO is an ETF that represents oil. You can see on the daily chart it's negative. Let's take a look at a shorter term view. There is the hourly or 2-hour chart going back a month. Sellers are in control. Downward trend, therefore that is a negative chart. But if we look at the 3-year chart, you see that we're at a pretty critical point, because if I take my trend line and start at the bottom and let it come up until it touches that inflection point, I'm still well above that trend line. If I go to this other inflection point, I'm right at it. Which is the right one? It's hard to say. I would say that we're definitely dancing around in a support zone. If we were to break this, we still could bounce a little bit, maybe a couple percentage points lower. But the oil market is at a place where it should make a little bounce back. We've been pretty weak in the energy market for most of this year. However, energy stocks are still benefiting from the fact that oil prices are high, historically high. And so there may still be opportunity in energy stocks. But if you think specifically about the chart of oil, it is, I would say, on the weak side, nearing support where it should bounce. All right, well, I talked about the importance of the US dollar for commodities, and there's one of the reasons why gold has done well. You can see the US dollar has moved lower over the past 2 months. If we take a look at the 1 month chart, you can see that the sellers are in control of the US dollar. That is a negative chart still. It remains negative until the downward trend line is broken. And you can see that we're right at it. So I have some sense that maybe we'll see the US dollar bounce back a little bit next week. But until it breaks that downward trend line, I'm not going to get too optimistic. Looking at the 3-year chart, again, if we draw the upward trend line, start at the low, just let it come up to those inflection points. It's very similar to the oil chart where it's run away and now pulling back. When it gets down to that trend line, we should see the US dollar bounce. There is some sense that we could bounce earlier, but I think it's more likely that we're going to see a little more weakness in the US dollar. That would mean probably interest rates fall a little bit more, and then we see some of that support stocks for the short term. Stocks are oversold. So you can see how all these things interconnect. Now let's finally look at the chart of, we'll come to Bitcoin in a moment. Let's take a look at chart of interest rates, TBT. This is a proxy for interest rates. It doesn't represent interest rates exactly, but it's more or less what we want. And there you can see that interest rates are right at that trend line. What happens when price falls into trend lines? It usually bounces off of it. We've seen this before. I talk about this almost every week. We've fallen into support. We should bounce, but do we actually break down through it, or are we going to see interest rates rise? That will affect the US dollar. That will affect commodities like gold and oil. And that, of course, will affect the stock market in general. So really important to watch this TVT chart. And you can look at it on the weekly time frame, but you can also look at it very short term on the 1 month time frame, looking at the 2-hour chart. And is it going to break that line? Or are we going to go like this and then break down? If we break down through the floor, that means interest rates are going lower. If we break up through the line, we're probably going to see interest rates move higher. All right, finally, I know many of you are interested in cryptocurrency, so let's take a look at GBTC. It has been a negative chart for a long time, and it remains so. The sellers are in control both in the short term and in the long term, and so I think crypto is a place to avoid until the downward trend lines can be broken. That could happen next week, but it hasn't shown us any signs yet. All right, well, let's take a look at my ratings then. Long-term and short-term bearish on US stocks. A little better on Canadian stocks. I've got a long-term neutral, but short-term bearish. Gold long-term bullish, but short-term neutral, as we did see a little bit of hesitancy at the end of this past week. Oil bearish on both time frames. US dollar neutral long-term, but bearish short-term. Bitcoin bearish in both time frames, and interest rates long-term neutral and short-term bearish. All right, I like to always show a day trade of the week. Even in a down market, there's always stocks to buy. I call those alpha stocks, stocks trading on their own story, characterized by abnormal volume. So let's take a look at what that looks like. And here you can see IMV, which was a hot stock on Thursday. And you can see the volume on Thursday is much greater than the normal volume. So we have indicators and algorithms that find these things very quickly. Then the next thing I look for are these little yellow dots. The yellow dots represent my indicator called an action candle. And I want to see action candles breaking from the right kind of pattern. I love to see breaks of pullbacks, which we had there. I like to see breaks through resistance, which we had there. But this is really the best one because it was not only breaking from a sideways range, but it was also doing so from some optimism, and it did so with a lot of enthusiasm. You can see the volume coming in right around 11:30 Pacific, 2:30 Eastern time. The result is that the stock went from $3 to $4.43, but conservatively selling in here for $3.75, that's a little better than 25%, 20% move in just an hour or so. And that's the kind of day trades that I think you can do. Number one, focusing on alpha stocks. Number two, looking for action candles. And of course, if you're in my active live service at Stockscores, you will get those in real time. And then ultimately, good risk management, focusing on process, not focusing on the money. That's the key to being a great trader. Well, I hope that you've enjoyed this week's Market Minutes. If so, click on the like button, subscribe to the channel. Remember, we're coming into the holidays. We'll probably have a week or two where there is no Market Minutes video. The market's slowed down a bit. And one final thing, there's always people or bots that will put some marketing material. If you write a comment, someone will respond to you, making it look like it is me. It is not me, unless I'm sort of giving you some constructive answer. But if anyone is on there saying, hit me up on WhatsApp, call me on this number, it's all scams, spam. Ignore it, please. It's not really me, and I don't want you to get suckered into some deal from some scam artist. Okay, hope you've enjoyed it. Trade well.